Africa is urbanising at a rapid rate, and this means cities are expanding. That growth translates into an increasing need for commercial property. And hoping to build on that demand is Lango. The real estate company is currently in Nigeria, Ghana, Zambia and Angola and has assets on its balance sheet of over $600 million. But this is just the start for the firm. So this is Africa Pulse. I'm Bronwyn Seaborn, and on this episode, we get real about real estate in Africa. Well, Lango says it's focused on directly investing in prime commercial real estate assets in key gateway cities across the African continent. And joining me to unpack that in detail is the group's CEO, Thomas Reilly. Thomas, thanks so much for joining me today.
Thanks for having me, Bronwyn. Nice to see you.
So Lango's focus is to invest in prime commercial real estate across Africa. What about the continent gives you the confidence that this is the right strategy and that, probably more importantly, that investors will buy into it?
So, the African continent's obviously a really large place to invest. The reality is having confidence across the entire continent is probably a difficult thing to achieve, but there are very specific nodes and very specific gateway cities, as we call it, where there are very high levels of growth. The underlying markets are extremely compelling from an investment perspective, and those are the specific markets that we're trying to tap into. So ultimately, real estate is probably the largest asset class globally, and it's something that we are ultimately trying to package in a way that we can give a fund manager or an investor sitting in New York, London, Singapore, the ability to actually tap into and invest into Africa. So we see ourselves really as a catalyst for the capital markets as far as real estate are concerned, ultimately.
As you highlight there, you want strategic assets in high growth nodes across Africa's commercial capitals. Is that hard to come by? It seems like quite a tough ask if you look at it in depth.
The reality, Bronwyn, is that quality real estate across the African continent is in really short supply. So looking at the South African market as an example, you've got a large amount of really high quality assets and accommodation for blue chip corporates and so on in Johannesburg, in the Sandton node, in Cape Town, in KwaZulu-Natal, in Durban, and so on. The rest of Africa doesn't quite have that. So you have very specific business nodes within certain countries, not all countries. That's got to be said. But some of these nodes in, Accra as an example, the capital of Ghana, Lagos in Nigeria, Nairobi in Kenya, and so on, have really high growth nodes that are trying to accommodate an influx of large corporates coming into those markets, and there just isn't the amount of quality accommodation available. So the reality is that the supply and demand equation is in our favor as a landlord. There's far more demand than there is actual quality supply. And the reality as well is that coupled with that, if one looks at the high levels of interest rates that we've seen over the last sort of 3 years now or thereabouts since the onset of COVID, the reality is that the ability for developers to come into those cities and actually develop and finance, new assets just has not happened. So the supply demand equation has not only been under strain, which is great for us, but it's probably gotten worse, from that perspective. So, and better for us as a result. So we're finding that, certain markets are under pressure, certain developers are under pressure, certain landlords are under pressure with regards to their debt. But for a business such as ourselves, which is well capitalized and has surplus capital to deploy, we are potentially in a very strong and a very opportunistic position to strategically grow into the space.
If you look at your geographical spread, you're currently in Nigeria, Ghana, Zambia and Angola. Does that mean your focus now drifts towards acquiring perhaps some assets in East Africa? You mentioned Kenya there potentially showing some growth and some possibility for you. Or is it more about solidifying your presence in those territories now?
So I think we've been through a process over the last few years where we have stabilized the business. We grew to a reasonably large scale where we were one of the largest players in the continent. And we're about to, we're pretty advanced in concluding another transaction, which I can't say too much about, unfortunately, but the reality is that will see us have a far more pan-African presence than we currently do. We see ourselves really as an African property company, not just a specific regional property company. So it's really a pan-African offering that we are trying to package and offer to institutional, international investors. So on the back of that, it's very much a pan-African strategy, always has been. And I think, from that perspective as well, it leads into the listing. I mean, we're about to look at a listing on the London Stock Exchange. So very much trying to package to the international investor the continent of Africa as far as real estate is concerned.
Well, we look forward to that announcement about you really becoming this pan-African real estate company. But if we look at what you look at in terms of the assets that you invest in, you've got office, you've got retail, and you have some land as well. In that mix, is there a way to look at industrial property at all?
Yeah, industrial is something that, to be honest, has always been quite close to my heart. It's a favored sector within our business. But, coming back to my previous comments around, availability and supply of assets, quality industrial has just not been something that we've been able to lay our hands on. Suffice to say that I think in the next transaction, and once we're able to disclose more about that, you probably will see a fair measure of industrial coming through in that transaction. So, I think it's a desirable asset class. It speaks to, the logistics sector generally, I think in Africa is something that is only going to grow. It's really at its infancy compared with the rest of the developed markets internationally. So, I think that is something that we're looking at. Aside from that, obviously, other sectors that are related, such as data centers, looking at potential hospitality assets at a point in time are all sort of additive sectors that I think we feel could be accretive in the long term. So we for the moment have been very focused on sticking to our knitting, so to speak. We've focused on sticking to the asset classes that we've been very familiar with and very well equipped to manage and optimize. Being office and retail. Industrial will be the next step for us, and we possibly see some opportunities to broaden that sectoral exposure over time.
Amidst all of that, your focus is also on ensuring sustainable real estate practices. Give us some insight into how that works practically when you're investing in the buildings that you do.
Yeah. So from a practical perspective, there are two main opportunities for us as a business. Obviously, sustainable business practices and making sure that our assets are greener and so on from an environmental perspective, I think is a well-trodden road, and everyone understands the benefits for the communities that we operate in that sense. But from a tangible perspective, as far as our business is concerned and our balance sheet, it's about two things. It's about firstly trying to optimize the running costs of our business as far as possible, and that goes not just to the actual operating costs of each individual assets, but also we implemented a sustainable financing framework, which leads to a lower cost of debt in terms of the finances. So we have a little over $300 million of debt on the balance sheet at this point in time, and we have negotiated with our funders, which is Standard Bank and RMB at this point in time, joint funding us. We have negotiated effectively a discounted rate on our debt linked to these sustainability initiatives and the extent to which we managed to meet those. So that is a really sort of key driver and a key benefit for ourselves as a business in trying to meet those things. The other side of the coin obviously speaks to the demand side of the equation. So if one talks to tenants, as an example, and we have some of the largest blue chip tenants internationally that you could think of are probably tenants of ours across the continent, and they typically have a very strong sustainability initiative in terms of only occupying and tenanting properties internationally where they have a high level of greening or sustainability within the physical building. And the reality is that that strategy spills over to all the accommodation that they occupy globally, not just in the developed market. So being an African business with assets that are green, so we literally have the bulk or almost our entire portfolio greened at this point in time. We are a natural attraction point for tenanting those large corporates. So it has benefits on across multiple factors, and something that we're really quite passionate about. And I think on the back of that, one saw ourselves being awarded the accolade by the IFC. End of last year, we were awarded EDGE champion status, so really cementing our position as a leader as far as sustainable building practices in Africa is concerned.
You say the bulk of your portfolio is green. I picked up while researching for our conversation that you want your entire portfolio green by the end of this year. Are you on track to do that?
We are. We're currently sitting at 87.5% green. So I think that's a really commendable effort to the team and what they've managed to do. We see ourselves meeting that target by the end of the year. So we essentially have one large asset which needs to be greened in order to get to that 100% mark. Obviously it's a moving game as well, because we're a growing business. We recently announced the completion of a circa $200 million acquisition of some retail assets in West Africa. And the reality is those new assets that are coming into our portfolio, as soon as that transaction is completed, are not green. So, we've managed to green our portfolio to date, but we're going to have some more work to do to ensure that these new assets, meet the criteria that we'd like to stipulate in that regard.
Sustainability definitely winning you some favor when it comes to investors, I'm sure. And that, as you say, kind of key as you come to market eyeing a London Stock Exchange listing. How far are you away from that listing potentially?
So we have committed to a listing within the first half of 2026. So we have, let's call it a little over 18 months to go until that point. As part of that strategy, we are really pursuing two key things. The first is to ensure that there's a high level of scale, that the scale of the business is of a suitable size to warrant and to meet an attractive listing or an attractive IPO on the LSE. We currently have an asset base of about just shy of $1 billion. So we're by no means a small fish anymore. It's become a reasonably sizable business, and I think post the next acquisition, once we're in a position to announce that, we're going to see further growth and further accretive growth at that. So I think we're well on track for that. We've already been through an IPO readiness exercise. We're in contact with the London Stock Exchange. We're about to go through a process to engage various banks, so a beauty parade in other words, to assist us with that process. But obviously, what goes hand in hand with that listing process is starting to talk to providers of capital. And, just coming back to the sustainability initiatives that we are talking about, if one looks at the amount of capital available internationally, which has an impact-related flavor to it, and a sustainability-related flavor to it, that is only increasing as well. So, I think for ourselves as a truly African business, with our assets, dotted around the continent, and with very solid green and sustainable credentials, I think we're in a very strong position to garner a large chunk of that impact-related and impact-orientated investor capital. So I think to a large extent that may well prove to be one of the key pockets in supporting an IPO as we get to that in 2026.
I know you've hardly cleared that goal of having the IPO in 2026, and I'm going to ask you this question now. But would you ever consider a little bit further down the line, perhaps of a secondary listing on an African stock exchange, given that, like you said, you're this Pan-African company, and therefore allowing investors on the continent to have a slice of that story?
Yeah, so the JSE is a very obvious target for us, in that respect. And I think, the chance of ourselves, doing a secondary inward listing on the JSE is a very real possibility. In fact, it's probably going to be something that we will be doing. So, once we have the LSE listing in hand, to do a secondary listing on an inward listing on the JSE is a very simple exercise. So it is something that we have discussed with the LSE as well. And something that I think, speaks to the composition of our shareholder base as well. We have a very large and very well supported South African investor base and institutional investor base in South Africa. So we'd like to do that for them. I think there's probably more capital that we can ultimately tap in the South African market and perhaps the regional market in Southern Africa as well. But obviously from a strategic perspective, the London listing is important for us. We believe that it's important for us to position the business to international investors from a future capital growth perspective. I think it's a far deeper, far more liquid market to attract capital, and that is obviously our primary objective at this point in time.
Thomas, we look forward to seeing you reach all those goals in the next couple of years. But for today, let's leave it there. Thomas Reilly is the CEO of Lango, and that's where we leave it for this episode of Africa Pulse. But be sure to keep an eye on our social media to find out what you can look forward to in next week's episode. From me, Bronwyn Seaborn, and the rest of the team, it's goodbye for now.